If you're going to make money in the stock market, you have to understand what's driving the performance of the stock market. And typically there's only two things that are really capturing the attention of traders and investors. And right now, those two things are interest rates and earnings. So this week I'm going to show you the interest rate outlook and how to predict where interest rates are headed, because that has a huge influence on what the overall market does. And then I'm also going to talk about earnings, because it's a little more than just what companies report for their earnings. In this week's video, I'll also do my normal market analysis. We'll figure out where stocks, commodities, and currencies are likely headed. And then at the end of the video, I'm going to look at the Stockscores trade of the week, a stock that gained about 1,000% in a single day, and how I found that stock very early in the upward run. All right, so let's talk about this idea that there's primarily two factors that drive the market, and right now it's interest rates and earnings. Now, yes, there's all kinds of little things, but these are the two things that matter the most. And when we talk about interest rates, what we've seen over the last few years is that interest rates took a real dramatic rise in 2022. And you can see that on this chart here. This is a chart that represents interest rates. It's not the interest rate chart. It's the inverse of the 20-year US Treasury bond market, and it's an unleveraged ETF. Now, what this one does is when the bond market goes down, this goes up. And that's why it represents interest rates, because, of course, there's an inverse relationship between interest rates and the bond market. If the bond market goes down, interest rates go up. If the bond market goes up, interest rates go down. So because this is an inverse of the bond market, it really represents what interest rates are doing. And you can see that from 2022, January 2022, until now, we've had a pretty dramatic rise in interest rates. And one of the factors that has really hurt the market in the last few months here is the fact that the bond market was going down, which meant interest rates were going up. And that's because inflation has been still relatively high in the US, and the US Federal Reserve wants to keep interest rates high. This interest rate outlook doesn't matter so much for the large cap tech stocks, because these companies have so much cash, they really don't need to borrow. And their products tend to be kind of insulated from interest rates. Now, interest rates affect the purchase of automobiles, of houses, and of course, small cap stocks who have to borrow tend to have higher interest rate costs, and that actually impacts their earnings. And so what we see then is two markets. We have the S&P 500 dominated by the large cap tech stocks, the NASDAQ 100 also, and those indexes are doing quite well because a small number of stocks in those market-weighted indexes have been doing well. And so, companies like Apple and Microsoft, they have a heavy weighting in the index, much bigger than the smaller companies in those indexes. And so they've kept those indexes looking pretty good. And I'm going to show you those charts of the indexes in just a minute and where they're likely headed. So at the same time, you have the small cap stocks, and I'll also show you the chart of the small caps, which have really lagged. And that's because of the interest rate factor. All right, so we've understood now that interest rates have had a big influence on the overall market. But if you're a trader, you don't really have to care about these big macro factors, because the other factor that drives stock performance is earnings. And it's not just what a company announces for earnings, but instead what the company announces and how that indicates what future earnings will be. And this is a very important concept that a lot of people miss when they're starting out in investing and trading. The earnings from the past do not matter, because the market is forward-looking. So once a company announces its earnings, it may have a quick pop on that. Netflix, for example, had better than expected earnings, had great growth. They announced that, the stock went up. But now that information is old news. It matters not at all anymore. What matters is what the earnings will be in the future. And in that regard, when a company announces, let's say it's a biotech company, and they announce that they are doing, phase 3 trials of a new drug, that creates the potential for a dramatic increase in future earnings. And so when companies make announcements that create speculation for what will happen in the future, that can drive stock price really significantly. So let me show you an example This company, CMPX, has basically doubled in the last 2 weeks. Now on January 8th, right here, the company announced sort of an update of corporate activities. You can go, Google Compass Therapeutics, go to their website, you can read that news. It's not the news that's important, it's how it was written. It's the fact that it creates speculation, because it talks about all these things that the company are doing which could, in the future, have a dramatic impact on earnings. I don't think they have any earnings right now. Maybe they do, but that's not what the news was about. The news was about, here's our corporate update. Here's the things that we're working on. Here's the things that can drive future earnings. And that created this speculation among traders, because there's the tendency in the market for people to buy the rumor, sell the news. So the rumors, the speculation, is what caused this stock to make this really significant run up from, again, when the news was announced, it popped very quickly up to $2. It's now sitting just over $3. And that's because the market is speculating on what future earnings will be. All right, now let's get into the normal market analysis here. We'll jump to the Stockscores website. Just a reminder, this is my website, stockscores.com. It's got lots of great resources that are free. It also has some things that you have to pay for, but I would encourage you to at least use the Stockscores, which you can see here, free for any stock. These are meant for position trading. They're not meant for day trading or swing trading. We have other vehicles and analytical tools for that as well. But let's get into the S&P 500 chart here. And this is the daily chart. And you can see that we are in an upward trend. So this is what I meant when I said that the index is doing well, even though most stocks in the S&P 500 are not actually doing that great. And that's because of the interest rate factor. But the stocks that have the heaviest weighting in this index, Microsoft, Apple, Google, the big tech companies primarily, they have been lifting this market higher, and the upward trend is still in place. So you can see here a strong upward trend. That's a bullish market. And in the short term, if you're more of a trader, we've actually had a good little rally the last week and a half, and it's taken stocks up into some short-term resistance here where we may see the market stall a little bit. All right, let's take a look at the NASDAQ. QQQ is the symbol. And then we go to the 3-year for the long-term outlook. Upward trend is intact. Daily outlook on the 6-month time frame, you can see we're kind of stuck in a little bit of a sideways range. If we go to the intraday chart, fair bit of volatility. That shows some uncertainty. Good little comeback the last 5 or 6 days, now bumping up against resistance. All right, let's jump to those small cap stocks now. And this is where you're going to see a very different looking chart from those large cap stocks. You can see that we don't have the same strong upward trend that we had in the S&P and the NASDAQ, and that is the interest rate factor, because these small cap stocks are much more affected by interest rates. With that said, the strongest movers in the market, the stocks that make the 1,000% gains, which I'll show you at the end of the video, those stocks tend to be small cap stocks. So by no means am I saying do not trade small cap stocks. You just have to focus on alpha. And I'll talk about alpha when I talk about the trade of the week. But primarily what it is stocks trading on their own story, on the speculation for future earnings perhaps. That is what can drive those small cap stocks. I would not own small cap stocks in general. I just wouldn't buy the index because it's not looking all that great. It's not terrible. But what I would do is look for opportunities in the small stocks because they are making those real market beating returns. Now you can see that in the very short term, the small cap index had been in a downward trend. It broke that and is now starting to build optimism. So it is improving. And that's because people starting to speculate that maybe inflation is cooling in the US, and that could drive this particular market higher if we get some interest rate cuts. Here's the Canadian market, daily chart, much like the S&P and NASDAQ. Long-term chart, much like those as well, in an upward trend. Let's jump to some of the commodities. GLD is gold, and it's had a good little comeback this month. Nice little rally in January. Let's look at the 3-year chart. It's resuming the upward trend. This is what we see in upward trends. You move up, you pull back, you break. You move up, you pull back, you break. And you see it over and over again. You move up, you pull back, you break. You move up, you pull back, and you break. And that should resolve with this trend continuing. So if you're in gold, continue to hold. It looks pretty decent. Oil is sector of the market that started to turn. You can see the decent strength in the month of December. If I go to the 3-year chart, it's still stuck under this ceiling here, but it is slowly building optimism. The 1-month time frame, you can see we had a good little rally. It gave back a little bit of that. This is the pullback, and what we want to watch for is a break of the pullback, and that should lead to a resumption of the trend. You can see the sentiment stock score is decent, and that is a dramatic change from really what the case has been over the last year, because oil's been kind of dead money. All right, let's move to currencies. UUP is the US dollar, and you can see that one of the reasons why gold has been able to do well perhaps is the US dollar has actually been falling. And again, that's that speculation that interest rates may get another cut as inflation started to cool. We had a jobs number that was a little weaker than expected, and so that's making investors start to speculate that we'll get some more interest rate cuts. How about the Bitcoin? GBTC is one of the Bitcoin ETFs, and you can see that it's essentially been in this sideways volatile range for a couple of months. So long-term picture is still decent, still in an upward trend. Lots of volatility, which shows uncertainty, but I think if you're in it, it's a hold. I wouldn't say it's a great buy here. It's, it's okay. It's got good long-term upward momentum. You just may have to be patient with it. All right, finally, let's take a look at the bond market chart. TLT is the symbol. And there you can see that it's really been pretty bad the last few months. But in the last week and a half, you're starting to see a little bit of life to the upside. By no means is it anything to get excited about, but it is improving. And that shows up even more. When you look at the 1-month chart, you can see the downward trend line has been broken, and we're building a rising bottom. We just need to break through this, and that'll be the market voting that interest rates are in fact going to get some more cuts. All right, so my ratings then, you can see long-term or short-term neutral on all of the stock exchanges, just because they're bumping up against some resistance. They do look better than last week. Long-term bullish on everything except for US small cap, that's still neutral. Gold bullish on both time frames. Oil, short-term bullish, long-term neutral. US dollar, neutral short-term, that's a downgrade. Long-term bullish. Bitcoin, short-term neutral, long-term bullish. And bonds, a little better, short-term neutral, but long-term bearish. All right, let's get into the trade of the week. And we had a couple of big movers this past week, and that's always fun to watch and fun to trade, I'll tell you. But DWTX was a stock on Thursday that just made this massive gain. Now, I started watching the stock very early in the day, actually in the pre-market, because it was trading abnormally. At the top of the video, I said that earnings matter, and not necessarily earnings, but the expectation for future earnings that drives stock price. And so when companies have something that the market is speculating on, that creates alpha. That means that the crowd will flock to that stock because there's something that they're speculating on, something that they're excited about. And so this is a biotech company, so it must have, I didn't read any news on it, but it probably has something exciting happening. That creates the alpha. And I don't read news. I don't care what people say about companies. I care about what people are doing with their money. Are they buying aggressively? And so I created an indicator to look for that. It's called an action candle, and it looks for statistically significant abnormal price movement, abnormal volume. And so on DWTX, you can see there's these little pink dots, pink and yellow dots, and they're all throughout the chart. But the ones that caught my attention were very early in the trading day on Thursday, and they really started down here at about $3. And I just watched the stock because of that. We had the trade entry signal right there. And then along the way, I love to trade pullbacks. So the stock moves up, pulls back, breaks. Great, that's an entry. Moves up, pulls back, break. And then you can see it went absolutely parabolic, moving from way down here in the $3 and change, finally broke through $4, made it all the way to $28.75. And again, I want to emphasize, I was not watching this stock, trading this stock because I like what the company is doing, because I don't read news. I couldn't care less. What I care about are what are people doing with their money. And when they're buying aggressively, that tells me everything I need to know, because people do that rationally, well, at least in the short term rationally. And they will chase the stock higher. I want to get in before the crowd. I look for that abnormal activity using these indicators. You can learn more about that at Stockscores.com. It's something called Active Live, a service where we monitor the market in real time, looking for these abnormal moves. And every day there's at least 2 or 3, but sometimes even more. Hope you've enjoyed this week's video. Make sure you go to stockscores.com and register on the website for the free weekly newsletter. It doesn't cost anything. I do a little written lesson every week. I pick some stocks for the longer term trades. If you're not into day trading, that's where you can find some of those. And as always, if you enjoyed this video, click the like button and subscribe to the channel. Most importantly, trade well.